All right, let's jump right into this. Today, we're unpacking a complete 360-degree explainer on Spectrum Brands. We're going to tear into their latest earnings, look under the hood at their financial health, and map out exactly what the future might hold. And as always, we are just looking at the raw data here. No spin, no taking sides. We just want a clear look at what the numbers are actually telling us. Whether you're a seasoned investor or you just track the consumer goods space, there is a seriously fascinating story unfolding with this company.
So our agenda today is broken down into 4 quick parts. First, the snapshot. Then, the catalyst. Next, the foundation. And finally, the horizon. Let's get to it.
Starting with Part 1, the snapshot. Let's see exactly where Spectrum Brands stands today.
At the time of pulling this data, Spectrum Brands, trading under the ticker SPB, is sitting at exactly $82.72 a share. But, what actually drives that price for a nearly $2 billion company? I mean, they literally touch millions of households every single day. So to really grasp what's going on, we kind of need to break the company down into its core moving parts.
Think of Spectrum like a giant puzzle made of 3 very distinct pieces. First up, you've got Global Pet Care, which covers everything from companion animal treats to aquatics. Think of brands you've probably seen like Tetra or Nature's Miracle. Next is Home & Garden, which is your pest control stuff, Hot Shot, Spectracide, things like that. And finally, there's Home & Personal Care. This is the big household appliance and grooming side, holding legacy names like Black & Decker, Remington, and George Foreman. And as we're about to see, these 3 segments, they're living in completely different realities right now. Which brings us to Part 2, the catalyst. Let's dig into their Q2 2026 earnings and see how those segments are actually performing. You can instantly see the stark contrast here. When comparing fiscal 23 to fiscal 24, there's a clear, undeniable growth trend in both Global Pet Care and Home & Garden, but then you look over at Home & Personal Care and it's a noticeable decline. It's basically a tale of 2 entirely different business trajectories living under the exact same corporate roof.
Let's really compare these extremes because it's wild. On one hand, you have this incredibly robust 11.2% double-digit sales growth in Global Pet Care, and that's being driven hard by e-commerce momentum and companion animals. But on the exact opposite end, Home & Personal Care saw a 5.5% drop. Why? Well, the earnings call pointed to really soft consumer demand across North America and Europe, plus high inventory sitting at retailers. It boils down to this. People are absolutely still spending money on their pets, but they're holding off on buying a new blender or electric razor.
But hey, despite the drag from the appliance side, CEO David Maura was quick to highlight a major win. The company returned to overall top-line growth for the first time since Q1 of fiscal 2025. Net sales actually bumped up by 4.9%. And that growth, it was driven almost entirely by outperformance in the pet and home and garden sectors. Those 2 basically put the entire company on their back this quarter.
So what do you actually do with a struggling segment? Well, you take action. To fix the drag from Home & Personal Care, Spectrum just locked in a $127 million strategic investment from Oaktree Capital Management. This is a massive, game-changing move. It values that segment at roughly 6 times its trailing 12-month EBITDA. And crucially, it's non-recourse to Spectrum Brands Holdings. Basically, they're setting up Home & Personal Care as a standalone business to pave the way for an eventual spin-off.
Okay, moving on to Part 3, the foundation. Let's talk Fitch ratings and sustainability.
Over on the credit side, Fitch recently affirmed Spectrum's BB rating with a stable outlook. And it's a real balancing act. The positives are great. They're generating solid free cash flow, and their leverage is expected to stay comfortably below 3.0x. But Fitch isn't ignoring the risks. Spectrum has some heavy exposure to tariffs, specifically around $300 million in finished products sourced from China. On top of that, their overall EBITDA is forecast to stay below $300 million annually, which is kind of small for this specific rating tier.
Now, here's where things get really fascinating. Look at that net leverage ratio. It's sitting at just 1.66 times. Management's long-term target is actually between 2.0 and 2.5, which means they're operating way below their own debt ceiling. How on earth did they manage that? Well, they made an absolutely huge strategic play back in 2023. They sold off their hardware and home improvement segment for $4.3 billion and immediately turned around and used that cash to completely wipe out about $3 billion in debt. I mean, talk about radically fortifying a balance sheet.
But hey, a company's foundation isn't just about financial metrics, right? It's operational too. Sustainability has become a massive focus for Spectrum. Take their Global Pet Aquatics line. They are putting serious work into lowering their environmental impact there, all while maintaining that double-digit sales growth we just talked about.
And the numbers back up the effort. Since 2020, they've hit some truly wild ESG milestones. We are talking about a 75% reduction in global water withdrawal. That's huge! Plus, an 18% drop in energy consumption across their direct operations, and they've literally cut their global hazardous waste generation in half, 51%. And listen, these aren't just corporate feel-good stats. When you manage resources this efficiently, it directly benefits the bottom line.
When you stack them up against the competition, the results speak for themselves. On the Thesis Sustainability Index, which is a major benchmark in the consumer products world, Spectrum hit a score of 68%. The competitor average? A measly 45%. So they are absolutely blowing past their peers when it comes to supply chain and product sustainability.
All right, let's wrap this up with part 4, the horizon. What do the forecasts actually look like?
If you're an income-focused investor, this right here is your number. Spectrum currently offers an annual dividend yield of 2.27%, paying out $1.88 per share every single year. They have a very consistent track record of returning capital to shareholders, so it's definitely an interesting play if you want steady income paired with some potential equity growth. But if we zoom in on the short-term technical indicators, the algorithms are honestly a little confused right now. The RSI is sitting dead neutral, the MACD flashing a buy. But then the stochastic oscillator is firmly dragging it into sell territory. When you aggregate all these momentum models together, the overall technical summary actually leans toward a sell.
Which sets up this absolutely fascinating contradiction. On one side, human Wall Street analysts are super optimistic. They've set an average 30-day price target of $110.32, which, by the way, implies a massive 33% upside. Firms like Canaccord and Deutsche Bank just raised their targets. Yet the automated, math-driven technicals are telling us to hit the brakes. It's the ultimate battle: human fundamental optimism versus cold, hard technical momentum.
And looking even further out, well, the aggregate models show a pretty bumpy road ahead. The data suggests the stock might climb to a peak around $104 in 2027, but then, bam, a sharp slide back into the upper 70s by 2028. Then another rally in 29 before potentially dipping back to $77 by 2030. It's a perfect illustration of just how volatile consumer goods can be when you're fighting shifting macroeconomic winds.
So, what's the big takeaway here? We're looking at a company right in the middle of a major transition. You've got fantastic cash flows, a bulletproof balance sheet, and a pet segment that is absolutely booming. But on the flip side, they are fighting an uphill battle with soft appliance sales, China tariffs, and a tricky macro environment, all while trying to spin off a huge chunk of their business. So when you weigh those optimistic human analysts against the cautious algorithms, does Spectrum Brands earn a spot on your radar? That's the question I'll leave you with today. Thanks for hanging out for this explainer, and I'll catch you in the next one.